So today, going to be looking at Iris, looking at some of my index trading systems within Iris, the practicalities, how they work, but also how I'm executing them in particular on the viewpoint system. And I'm going to kick off with my lazy. And we've done webcasts over the last little while in terms of myself and others of the setup. What I've set up here, these are all linked together, so they broadcast. So as I change the code for the one, which that's Indy25, it'll cross all three. This block down at the bottom is news. It's an index, so there is no news associated with it, so don't worry that. This is my lazy system, which I trade on a weekly chart, and I trade using ETFs, 15, 30, and 60 moving averages. If we touch on the 30 and 60, initially, I want the 30 above the 60 before I'm interested in taking a trade. So we can see here, if we zoom in, we've just had the crossover now. So that means I'm interested in taking long trades when they will trigger. The trigger will be is a move up through the 15-week green line. Now that's not happening. Let's go look at S&P because we've got some trades that have happened here. S&P, you can see the blue above the red, which is 30 above 60. There was the move higher, which is that green candle. I enter in the following week. It's a weekly chart, and therefore I'm holding. And I'm doing this ungeared. And the reason I'm doing it ungeared is because you get trades that run forever and a day. For example, here, and there's a trade from November 2016, which is as Trump won, and that trade pretty much stayed live until Jan 2018. That's a lot of funding to pay. You don't mind paying the funding if it's all rocking and rolling, but let's look at J212, which is the Finney, which keeps kicking me in and kicking me out, and then your costs start to add up. So that one did not confirm because my 30 was below the 60. That one did, and then I'm out. That one confirmed, and then literally there's my confirm, and then I'm out, and then it's dropped away again. So I'm using it in an ungeared environment. I'm using the ETF. It's designed for indices. So if we bring in an equity, and I want an equity that's not going to make it painful for me. So there's Richmond, too much volatility, too much bouncing around, which is the problem with equity. Indices are typically less bouncy. And here's NASPAS, so it would have, nope, that would have been your confirmation entry. So you would have entered some 2 weeks ago. You're up a bit. That one wouldn't have, because if you notice here, my 30 is below. So it's always primary trend first. 30 and 60. Once I've got my primary trend and my primary trend is up, then I'm looking for long trades. I don't do any short trades in this system. Two reasons. Firstly, I'm not doing any gearing, so I can't short the ETFs. And secondly, short trading is rough and vicious. I mean, there's money to be made, but it's not easy money. Short's great when you're on the right side of Steinhoff, or Tongart, but when you're on the wrong side of a short, it can really be painful. Just a quick point. So this is the back to the Indy. That trade there goes through my 15-week EMA, which is a trigger for a buy. However, look at my moving averages. My 30 was below 60, so it doesn't count. I need that 30 above 60. Question coming. I don't use any indicators or oscillators. Not at all. My trading is always very, very simple. I use, at best, I use 3 moving averages. I'll show you in a moment my using 2 moving averages. And then in November, I'm going to do a webcast, which is exclusively just looking at price action. In the sort of early morning of the Aussie. Look at that price action and take the position from the price action without any indicators, oscillators, or anything in between. Let's go across to Aussie. I'm going to come to the system in a moment, but this is my setup as I look at it. To my left-hand side here is the Aussie chart. It's a 15-minute, but obviously I can change that to any time frame. Up at the top here, I've got the J200, which is the top 40. Now, the top 40 is the underlying for the futures, Aussie futures. So that's why I've got a top 40 chart here. Got my 7 and 21s. I've got my average true range down there. I'll come back to them in a moment. I'm looking at market depth for the Aussie, which is full market depth. So you can see 332 contracts in total. And if I hover there, volume ahead is 49, and on the short side, volume ahead is 67. I've got the ORME here. Now, both Aussie and ORME, they clear out overnight. So when you log on at 8:24 in the morning, you won't see any bids and offers. They start arriving on the screens at 8:25. There's no trades that are held overnight. I'm watching ORME as well. I've been trying to spot market makers. I've been trying to spot if there's arbitrages, and I'm going to do some trades in the ORME just so that if we lose money, we're losing R1 a point rather than 10 Rand a point. And I did some this morning so we can see the order pad, and they all went horrible, but nonetheless. This is the Aussie in of itself. And so there was an algo this morning, and you could spot the algo. There were 22 contracts, and they insisted on being best bid. So they would have gone 455. And then if someone goes ahead of them, they move higher. If someone drops back, they move back. The algo was simple. Want to buy, but don't cross the spread. Just be best bid. And they're just very, very easy to spot. And then this is the depth history. And I got to put a security in there. I'd like the depth history. I just haven't been able to come up with a cunning way to actually effectively use it. So what it's essentially showing you is the volume on the buy side, the volume on the green side. That's cumulative volume. And it's showing you where the last couple of trades have been. I can, if I want, have non-cumulative, in which case it shows you the individual trades, and I can aggregate the prices up. I can click it onto auto. I can show tens in terms of points, so that the 10 there is in terms of points. I typically go cumulative because then what I'm looking at here is essentially a crocodile. So what we've got here is that is bigger and looking to swallow the other side. Not patently so, but particularly sometimes in the morning when we come in sort of pre-equity open, you can really get a sense of where it's going. Question coming, it's not showing time. No, it's not showing time at all. All it is it's showing you the bids coming through, the offers coming through, trades as they've happened. White line is lost trade, and then up at the top there you can see total bids, total volumes that are sitting there. And you can hover there in a case of volume to that point is at 70. Total volume on the buy side is 332. That total volume on the buy side is a bit useless. I'll have a squiz in a moment, but sometimes those bids are so far down in the market, unless we're having a crash, it's absolutely not going to be of any import. If we scroll down, we've got buyers down to 48,784. So those buyers are 1,500 points away. They're not serious about buying at all, I would suspect. Question from Levine asking about the Ikamuka indicator. I've mispronounced it on ETFs and FX. I last had a look at that indicator probably plus 10 years ago. To me, it was complexity. The point with my trading is that, and I come from the school of thought that says quite simply that your single truth in the trading market is your price. So it is true that the last trade on this index was 54.84. That is true, and the bids and offers as they sit are true. Everything else is a deviation of the truth. And even a moving average is taking the truth, which is lost price, running it and other data through a formula, in the case of moving average, just the average price over that period, and spitting out an answer. We move to RSI, we move to MACDs. They're taking you further away from the truth. So if anything, I like pure price, failing which I like trend and support lines. Problem with trend and support lines is your biggest problem that you're going to have as a trader is your own bias. And that bias is going to hurt you. This morning, and I'll show you in a moment, I was technically right, but I couldn't get over my bias and it cost me money. I should have paused and waited for the market to confirm what I was expecting to happen rather than saying, I'm in, let's do this. And hence I lost points both times I traded this morning. In fact, ahead of the open, and I think the other was just at the open. So I'm always keeping it quite interesting. You'll notice, quite simple, you'll notice there's a 25 contract bid that's popping up every so often here, and then disappearing, and that 10 as well, and then disappearing. There's the 10 now moved up to there, although that's two bids. It's people flashing. It could be algos, it could just be, and you'll see a lot of it, particularly during sort of more hectic times. They don't want to trade. They're trying to spook the market. There's a 13, although that is 4 people across. So that's 4 contracts making up 13. Now it's 3 making 11, and now it's 1 making 7. There's a lot of stuff coming in and out all the time, and patently what they're trying to do is spook a market. So the other day, there was someone coming on the sell side with 44 contracts at a time, but they were never best asked. They were lurking sort of down around here, which is nice, but they were trying to intimidate the market more than anything else. Ben, I'll get you in a second. Am I able to compare with Swordfish? Yeah, so I haven't used Swordfish in a long time. The only benefit to Swordfish was the ability to put stops and drag them on screen. Swordfish to me was immensely buggy. The other trick, I run Mac, and it's a Windows, so I've got to run a virtual machine, all sorts of issues. But to me, Swordfish was just a buggy beast. Ben, Aussie SEP 19 is the index futures for the All Share Index, which is now called the Top 40 Index. I'll show you some links where we can find more about that. But we're basically trading the futures contract on the Top 40. The Top 40 being the large index, the index of 40 largest shares. There it is there. And then what you do is you can trade that index with the different ETFs. Either the Ashburton or the Stanlib is typically the cheapest in terms of spread. We can check that in a moment. I'm trading the futures. And we've got the Aussie, which means you make or lose 10 Rand a point. So you buy, you make 100 points at 10 Rand each, you've made 1,000. Or the AUMI, which is the mini version, which is 1 Rand a point. And I always say to folks, if you want to be a trader, stay away from equity. Equity is dangerous, single event risk. One CEO commits fraud and the bottom falls out of the market. And if you're on the right side, that's excellent. But if you're on the wrong side, it's going to really, really hurt. I mean, it'll destroy portfolios. Whereas here, you can start with 10 grand. Whereas in equities, you can't start with 10. AUMI, you can start with trading 10 grand. And you can practically actually start to learn what you're doing. What I also like here is you notice I'm running the last 20 trades. And really what I'm looking for is the colors. So if the color is green, it means that there's a tick up. So we had a 490 trade and then a 492, so it ticks green. The 490 was white because the previous trade was 490, so it was the same. And here we had a tick down, 485 to 484. So what I'm really trying to see here is get a sense of who's crossing the spread. Are the buyers going into the bid or are they just hitting the sellers? Now, we can do that 2 ways. Obviously, we can just monitor, but we can get a sense here also what's happening. Now, at this point in the day, the market's typically quieting down. Peeps are on lunch. Asia's closed. We've been open for a couple of hours until the US opens. So not a heck of a lot happening. Your big activity is early morning, and you can see it here. That was this morning where we had a range from, call it 5,500 down to, we had a range of about 330 points in a 15-minute candle. I hate to trade that first candle. I have, but I don't like it. But that's where you're going to get serious volatility. So what I'm doing in the mornings at sort of 8:30, I'm logging on, I'm having a look-see, and I'm trying to determine the move that will happen, the power move that will happen. Catch it, get in at about 8:45, ride it, get out first contract at 100 points, second at 200, and run to the hills. Trick being is I run a very tight stop loss. So this morning I was right in that the power move was green, but I got caught on that tail there, and that stopped me out. So I actually lost money. And then that's the trick. I was right. Now, obviously, I can expand my stop loss, but at this point, I'm risking 200 points when I enter. My reward is 300. I'm right more often than I'm wrong, and therefore it makes money. And that we're going to do a webcast on. It's going to be 21 August. Am I right? I think Daneo will be sending out the mailer probably later this week, early next. It'll be an 8:30 in the morning webcast. We will record it, but I'll be looking at that. The other system I like to trade is my 721. Now, I don't trade anymore, and here's the reason why, is because I'm trading it typically in an hourly chart, which means I've got to be in front of my computer all the time, which means that I'm missing trades or I'm computer bound. So the way I'm trading at the moment, pretty much I'm in front of my computer for 15, 20, maybe 25 minutes in the morning, entering my trades, placing my stop losses, and then I can ignore it. Then I can leave, and then my day's free, and I can make myself 300 points. And I don't come back and trade during the rest of the day because, frankly, that 300 points is now in my pocket. it's my 300 points. If I come back to trade, there's an odds-on chance I will lose it. Yes, I might double it, but I might also lose it. So I got my 300 points and I'm perfectly happy. And that's on 2 contracts. So it's 150 points per contract. So the 721 is you run a moving average. Now, typically it works better if you run it on the underlying. So you chart it on the top 40. You can pick whatever time frame. I like the hourly time frame. I'll show you daily in a moment. And in essence, you're looking for the crossover of the 721, which in this case happens there. And then the next candle, did it happen there? It happened. Yep, it actually happened there. So the 7 went below the 21. That is a sell trigger. That is my confirmation at entry. So that would have been at 3 o'clock on Tuesday, which I would then have traded it in the Aussie. And there is 3 o'clock on Tuesday. So my short would have been entered at about, call it 51 to 40, or there's about, would have been the short entry. The point, of course, is if you weren't in front of your screen at 3 o'clock on Tuesday, well, you have totally and absolutely missed it. Question, why am I charting the top 40 and not the Aussie? Great question. The top 40 is less volatile. What you will see is that the Aussie has given you one, mind you know, these are, so you would have gone short on the Aussie using that same methodology earlier in the process. You would have gone short a couple of hours earlier in the morning. Nothing massively significant. But less volatility. So the reason why I'm liking that is because it's a smoother drive. I'm using moving averages, so it's just simpler if I'm just then charting the top 40. Because for me to move this all share right now, we can go have a look-see. So if I suddenly dropped 20 contracts into the all share, I would take it down. In this case, not a heck of a lot because a large buyer. So let me say I buy 20 contracts. I'm going to ramp it. I'm going to move it. Whereas to move the top 40, you got to do real significant size. So I'm charting my top 40. I'm then trading Aussie, or you can go and trade Ormi. So your entry into the short in this particular case at 3 o'clock on Tuesday at about 51 to 40. Question is, where's your stop loss? And there's 2 ways to run the stop loss. The proper way to run the stop loss in this system is to wait for those moving averages to uncross. In other words, you would still be short at this moment. Now, you can uncross on the index, and you can see it's going to take longer, or you can uncross on the futures. But you basically wait for the reverse to happen, i.e. the 7 to go up through the 21. Problem with that, again, is you need to be in front of your computer. So your alternative is then to use 2 ATR. And at this point, my ATR, and I use a 14 ATR, and you can see it down at the bottom. My ATR was 188. So my risk, my stop loss would have been, call it 380, and I would have been trailing a 380 stop loss, which probably would have got me stopped out about, so that drawdown there, 380 from there is 51.1. Did we get to 51.1? You would just have been stopped. So you would have ended up only making fairly modest points on this, 100 odd points on it in total, if you were using the ATR. If you're sitting in front of your computer, and the one issue, I used to trade this way back in the day, 04, 05, 06. When I was trading it, I used to sit in front of my computers all day. And the point was I used to trade it in different time frames. So I would do a 15 and a 60 minute, because the 15 gives you slightly earlier in, but slightly later out. So there's my 15. My entry would have been a little bit earlier, and the 15 is did it stop at that point? No, it did not. So you're still short, and now you're waiting, and that moving average is starting to uncross and undo the short. It's at this point, it's about 600 in the profit, about 600 points in the profit from earlier this week. You can also run it on a daily. And here's the daily version of it. And what you can see is it gets a little whipsawy at times in this sort of environment. And the trick with this system is that it can give you significant drawdowns. It can also give you nice moves. But when markets do that, now we're going back to May of last year. This is a trend-based system. When markets stop trending, it starts to hurt. Now, the obvious point is, well, let's try and put a filter on top of it and try and figure, when the trend is. And your filter would be the average directional index. Why is that so impossibly slim to see? And below certain levels, you're not entering. So in this case here, typically you would say a 20. So the 20 is about there. So you would have ignored a bunch of those trades there anyway, because your ADX was suitably low. It also means that you potentially missed the first break. Yeah, so it swings and roundabouts. So you get into less losing trades perhaps, but you still got caught in that bit of whipsaw there, and then you missed. No, you just caught that particular trade there. So that can operate as a filter to say to you, hang on a second, don't jump in. We're not seeing a trend. ADX doesn't tell you the direction. It just tells you the strength of the trend. Comment coming through. I'm always using 14s on my ATRs, my ADXs. I just use default. I just use the default. I don't think there is any special edge in not using the default. So let's go and do some trades. Show you how that works. I'll trade in ORME. Now, I've got this set up in two ways. I've got an order pad that sits right there, so I can go and trade, and it's set for ORME. So I can say, buy me one contract, make my limit at 503.50. It's good to end of day. I want to buy one. I hit the order. I confirm it. And then it should pop up on my order pad. You'll see it as saying pending, which means it's busy en route to online share trading. And then at some point in a moment, we will be able to see it in the market. I put it at 350, correcto? I think there's me there. And then it'll come through and you can manage it there. But there's another way that you can place an order as well, which is straight from the bids and offers. There we go. It's created. So now it's sitting in the market. Now I can do a couple of things with that. I can amend it. I can cancel it. I can create an alert. I can look at the charts and the broadcasts it. Let's cancel that one. And then the cancellation is pending. So it doesn't cancel immediately. It's got to hit the server, confirm the cancellation, and then come back to me. There is another way that I can do it, whereby I can go and hit down on the bid, and you'll see it's popped me up a box there. And the box has defaulted for the price that I clicked on, which was 50320, and you can see it has defaulted the volume as well. But that was a sell order. Let's make it a buy order in this case, because I hit that particular bid, but I want to go down in the bid, and now it's changed my limit there. 323. So there's two volumes going. Oops, not 323. 50323. Yes. Tells you what your margin is, tells you what your value will be. It's R1 a point, and the 323, there it is there almost immediately. So it's actually hit the market. It's still pending up on this side there, but there is my two contracts at 323. I can create an order straight from just hitting on those little dotted lines there to buy or sell at that particular point. And in this case, this order here, it's still pending. But you can also see my earlier orders from this morning, the completed ones. I was doing 2 ORMEs at a time. The completed but unfilled, what that was is I placed I go into the market, I placed the order, there was the price at 483, I was going long, and then I put my sold orders in at 583 and 683, and then so they're my targets in a sense, but I've also got a trading stop. So what happened was the trading stop got triggered, and then those 2 orders got cancelled. Then I went back in again, same story, this time at 440, put my 2 orders in at 540 and 640 to sell, but my stop got hit first. You'll get your errors coming through, you'll get your cancels, you can go and see, as I said, create your alerts, etc. And that one has been created, my 323. Why aren't you seeing? Okay, so great point. Why aren't you seeing what the order is in here? So I can change my views here. So there's my average price, which tells me when I'm in. What don't I care about? I don't particularly care about the code, but I do care about the order price. So now you will see, and let me shrink that one there. So there's my average entry, and there is my order price on the orders that are sitting there. So the 323 index points. Richmond was obviously 105. It's ZAR, it's an equity, it's not an index. Let's take that order. I have in the past left these around, and then that has been, so there I will cancel it. So you can run them all from here. You stop, you got to go set on the website. And so once I'm in here, this not that, this it's the website, and I will go log in and place my trailing stop in. On the 721, so I just want to quickly, the webinar downloads, if you go to webinar downloads, search for two things, search for Aussie, and you will see the different trading strategies I've got here, engulfing candles, my primary system, trading just as a concept using it, but also I've got the what are the futures, etc., etc. So there's a couple of videos there which we've done over time. Go find those videos and have a look-see to get a sense of what they are, how they work, etc. So as I was saying there, you've got two ways you can do the order. You can do it from here. I like to have that order pad open. It's nice, it's easy. I can stick anything into it. That was AUMI because that's what we were going to try on. Typically it would be Aussie, and there would be my buys and sells, limits, etc. How many do I want to trade, and I can stick those into the market. And they're in quick. They hit the bid and offer before they actually hit my order pad. The order pad is more just a case of to see what's been happening over the course of the day. Question, where does order pad come from? I'll show you in a moment. You can have current orders, active orders today and yesterday, last 3 days. You can have no grouping. You can have only certain accounts or all accounts. Order pad comes from widgets, so you would replace the widget. And there is your order pad. So it displays the status of current and historical orders within the rules. So what is it? All currents, only active, today only, today and yesterday, last 3 days. I'm not interested in grouping. I could group it by account or by status. So you can see the invalids, etc. More valuable to me would probably be grouped by account, but I'm trading futures, so that's moot. So I don't bother with grouping at all. Really, I'm interested in the time that they're happening. Question on the 721. No, not equity. You can trade this on indices. You can trade it on it actually works on currencies. It doesn't work too badly on currencies at all. USD ZAR. No, let's not do USD ZAR. Let's do USD Euro. And then you're literally charting the underlying. So there. Was your entry, and there was another entry, and I'm not sure what happened here. That was last night. So that was their Federal Reserve interest rate cuts, etc., etc. So it does work on FX. It needs lower volatility. Equity is too high a volatility, and equity is too high a single event risk. But I question, am I trading on an FX? No, I'm not. And because I'm wanting to be, my aim is to spend as little time as possible in front of the screen trading. So I'm doing that half hour in the morning. And then from then on, we're absolutely done. Someone asked, when is it? I can find that date for you. I just stuck it in. 21 August, 8:30 in the morning. Danae hasn't confirmed that, but I'm pretty sure that will be it. And then she will send it through shortly, and then we'll have it then. What am I looking for? I'm looking for that. Ian, great question. Where should you start as a beginner? So I don't know where you're based. If you're around, I'm doing a presentation on the 14th of August in Johannesburg on trading for where to start as a beginner. We'll webcast it in September, failing which hit up those videos under the webinar download, start viewing those, having a look. They talk around not just some strategies, but what is the product? What is the Aussie? What is the AUMI? How do you trade it? Why do you want to trade them? What do you not want to trade? Interesting engulfing candle almost in there. And then quite simply, you can go get those videos, start viewing the videos. My advice to folks is start trading in the AUMI. It's small. If it hurts, you're not going to, if you're going to make mistakes, you're going to do stupid things. I did stupid things this morning. I've been trading 20 years. And I was wanting to put some order pads in for this presentation and show canceled orders, etc., or unfilled orders rather. And I just wasn't patient enough. I was right, but not patient enough. And that's probably the generous view of it. Ian, I'm not sure my dates for Cape Town, but failing which we will be coming through in the webcast for those as well. But there's a bunch under the webinar downloads. Just search for the ALSI, ALSI, and you'll see a whole bunch of them being highlighted. These are from previous years, but they're all just sitting there in terms of trading strategies, in terms of what is the index, how does it work, etc., etc. Dave, yes. David, not off topic at all. Do I run different accounts for trading long-term versus short-term? Yes. So let me go to there. Let me go to there. And I have, so you'll notice I have multiple accounts. Now, some of these are tax-free accounts. Some of them are not my accounts, but I have different accounts for those different strategies that I'm doing. So my long-term investing sits in one account. My sort of second-tier investing sits in another account, and then my trading is happening in a third account. And I do it for two reasons. Makes it nice and clean for me and for me to monitor and record how I am or aren't doing, as the case may be. But more importantly than that, makes it nice and clean for SARS as well. And that when it comes to tax time, I can say to SARS, here's my trading, here's my investing. Because, sometimes you buy Steinhoff and 2 days later the CEO absconds and you had bought it for a long death to us part. And 2 days later you're out and SARS is like, oh, trading. Intent is important. And you can say my intent was long term, and my proof of that intent is look what portfolio I bought it in. If the accounts are on the same name, no extra fee. So one login, your note, and then just that drop down within it. Cool. Ladies and gents, we shall park it there. If you're in Josie, come to Glenhove on the 14th of August. And then webcast on the morning of 21 August. That will be recorded, so you can catch it later if need be. That will be at 8:30 in the morning. I'll probably log in a little bit earlier. Nothing really starts to happen until about 22:09, however. But that will be on the 21st of August. Cool. Ladies and gents, thanks everyone for their time. Everyone have a good day further. Cheers all.